Back with closing trades right here on ET Now, and we're coming to you live from the SBI Live newsroom. We're holding out pretty quiet right now in trade. So that movement in the market clearly continues. Flat for the Nifty, just circling around that 26,000 mark as we speak. Let's just bring out what the individual constituents are. Look at a TCS, look at a Tech Mahindra, Infosys. The clear edge of the market today in terms of the gainers is clearly with IT. That said, Coforge also is holding up quite well, and that stock is higher by a solid 2.6%. Petronet LNG has got to be the star performer today. The stock holding up a good 4.5%. Other movers include the likes of an Astral, HFCL, as well as CAMS, where you are seeing some decent price action come in. Lots in the red as well. Look at a Keynes, for instance. That stock has nosedived about almost 6%. Biocon has slashed about almost 6%. And then there is Power India, which is also tanking by 7% as we speak. But let me welcome on board Nilesh Jain as well and find out what he's making of the market and what a good strategy is. Nilesh, hi, afternoon. How are you looking to trade the Nifty ahead of the big event tomorrow? That's the RBI policy.
Hi, very good afternoon to you. Good afternoon, everyone. So today looks like a bit of a respite after yesterday's, sort of a pullback move that we saw from the lower levels. So Nifty manages to defend its 21-day moving average for the second consecutive session. Now it is important for the Nifty to close above 26,000 mark, which seems likely today. And there could be possibility of some bit of a pullback move to continue on the upside towards 26,100, 26,150. It is important now on the upside to break the barrier of 26,200, and 25,900 is acting as a very strong support. So that's a very tight range of 200 points as of now, 25,900 to 26,100. And whichever side it will break, we can expect follow-up move of 100 to 150 point in that particular direction. Now the probability of a pullback move is very high. Looking at the overall setup, we expect Nifty to move towards 26,100 to 26,150. And tomorrow we have RBI policy outcome, and ahead of that we can expect some bit of volatility to continue in the Bank Nifty as well. Now good part is that in last two sessions Bank Nifty defended 59,000 psychological support very well, and till the time it is sustaining above that particular mark, we can expect a pullback move in the Bank Nifty as well towards 59,400 to 59,600. So overall this is stock specific market where on index front we are witnessing some bit of a consolidation, but yes, sectorial point of view, IT, where we have seen a strong momentum, we continues to remain bullish on IT space as a whole.
Okay, Nilesh, we'll pause there. Now, let's...
Feeling the heat, the stock has been under pressure for the last three trading sessions and now on the brink of 5,400. But Nilesh, on the charts, what do you foresee for Interglobe? Should it breach 5,400? What happens next? Where do you see the next support?
Well, clearly today we saw a breakdown from a triangle pattern, and also interestingly it has given a breakdown below its long-term 200-day moving average. So that level has been broken after almost a span of 10 months now. So clearly looks like it is heading towards 5,300 to 5,200 on the lower side. It looks like a breakaway gap today with a big volume jump that we have seen. So price and volume breakdown clearly, and stock seems to be heading towards 5,300 to 5,200 on the lower side with a stop loss above 5,400. It's a sell on rise kind of structure. As it trades below its long-term 200 DMA, the structure is looking weak.
Again, we'll take a pause, we'll take a breather, we'll slip into a very short break. We'll continue talking stocks on the other side. Stay with us here on ET. Okay, welcome back and thanks for staying with us here on Closing Trades. Let me welcome on board Sunny Agarwal, Head of Research, Fundamental Desk at SBI Cap Securities. We're also joined in by Rajesh Bhosle, Technical Analyst, Angel One, joining us at this hour. Welcome both of you gentlemen. Now, I want to focus on a couple of stocks which are really moving in trade today. And Sunny, let me come to you first. Some of these diagnostic stocks, and let's pull up Vijaya Diagnostic. Stock is perked up 6%, very, very strong volumes, 30 times the average. I know that you wouldn't comment on volumes, but give us a sense on diagnostics as a segment or a sector, Sunny. How are you looking at it? Valuations have obviously run up. There are both positives and negatives. What's your sense with regard to the sector?
Yeah, good afternoon, everyone. Coming to diagnostic, I think quarter two, if you look at quarter numbers, we have seen pretty decent set of numbers from most of the companies backed by an healthy volume growth, favorable product mix. When we say product mix, it's more of a test mix, and most of the players have increased their penetration in the tier 3 and tier 4 cities. So maybe that has led to, and anyway, quarter two is seasonally stronger quarter as far as the diagnostic business is concerned. So if you look at the overall diagnostic universe, I think overall universe has posted closer to 18% kind of year-over-year profit growth, and the total cumulative number is closer to 326 crore. I think again the tailwind continue to be very robust. So we have seen recently for hospital businesses, we have seen a revision of rate by CGHS scheme wherein hospitals will benefit out of that. And obviously indirectly diagnostic player too tend to benefit whenever there is a better realization for an hospital player. So I think among the diagnostic play, a few companies which we like are Dr. Lalpath Lab, Metropolis, and Thyrocare. So all these three leading companies we believe will continue to report a healthy earning growth over the period of next 4 to 8 quarters.
Okay, Rajesh, what's your take with regard to this one in particular? What's the sense like Vijaya Diagnostic and the kind of move that it's made today?
So yeah, definitely we are seeing some strong traction. The prices were in a consolidation mode, but today we are seeing a descending triangle pattern breakout. So overall strong chart structure, and we expect the move to extend towards the levels of 1180 to 1200. So in the near term, if in case any dip that can be bought, today's low around 1000 levels can be kept as a stop loss, and as I highlighted, possibly 1200 first, and then it can move towards the 80 levels.
Any stock strategies that you may have before we let you go?
So I have a couple of buy recommendation. First of all, JK Tire, this particular stock is looking very strong on the chart. We have seen a good flag and pull kind of pattern breakout coming in this particular stock. So it's a buy for upside target of 485 kind of target on the upside, keeping a stop loss below 463. JK Tire is a buy. Now another stock that is looking strong on the chart, that is Info Edge, Naukri. So this particular counter has broken out from a triangle pattern breakout, and on the upside it seems like it is heading towards 1430 and 1450 levels on the upside, keeping a stop loss below 1378. Naukri, Info Edge can be bought.
Nilesh, thank you so much for coming in and speaking with us. I believe we have to let you go on that note. So thanks for coming in. Let me go across to and take Sunny's view with regard to IT. Sunny, the kind of move that we've seen in IT fundamentally, how are valuations looking, and what's the sense like with regard to IT? Rate cuts possibly on the annual. Is this something that you're looking more constructively at as a result of that?
Again, what I feel is that as a thumb rule, we have seen that whenever there is a 1% depreciation in rupee, IT companies that tend to benefit to the tune of 40 to 50 basis points as far as the EBIT margins are concerned. And I believe that is one of the key catalysts which has led to a revival in sentiment in the entire IT pack. And to top it up with obviously the probability of India-US trade deal and likely lesser uncertainty on the global business front. So that can lead to a better growth estimate for most of the IT companies in the fiscal year 27. So I think a third important point is obviously there was under ownership in the entire IT pack. So we have seen the most of the IT companies underperforming the broader market during the last 12 to 14 months, and that can lead to some short covering as well as fresh addition in the few long only portfolio. Among the IT pack, obviously there is no doubt that mid-sized IT companies are outperforming their large cap peers, and their despite of slightly expensive valuation, we are seeing that attraction continue to remain very strong. Few companies which we like among the mid cap IT pack is Tata Technology, Hexaware, Birlasoft and First Source Limited, and obviously the street favorite Persistent and Copoj, where we have seen a very strong earning growth as compared to its peers. Coming to valuation, so most of the tier 1 IT companies are trading at an very reasonable valuation. So if you look at average valuation band, 1 year forward price to earning multiple is between 20 to 25 times as compared to their mid-sized peers, which are trading in the band of 30 to 50 times price to earning multiple. Coming to RBI policy, again, I don't know whether there will be rate cut tomorrow looking at the way rupee is behaving. And another important point which I feel RBI will take into consideration is Bank of Japan upcoming policy on 19th of December. The way bond yields are shaping up in Japan, I feel that will be a more important policy rather than the US Fed policy, which is again due on 9th or on 11th of December. So I think keeping everything in mind, maybe I am of the view that maybe RBI will take a pause temporarily as far as rate cut is concerned. And to that extent, it should be neutral event as far as overall rate sensitive or markets are concerned.
Interesting you say that. Rajesh, what's your reading on how some of the PSB charts have been performing vis-a-vis the large cap private banking names?
We are seeing some mixed traction in the banking space, especially the PSU banks. They were the outperformers, but in the last a few sessions, we have seen some profit booking. From the banking space, we are more bullish on two counter. One is IndusInd Bank. It was in a consolidation mode, but today there is a traction. So we expect IndusInd Bank can extend a move from here onwards. Similarly, if you see ICICI Bank, it hasn't performed as what Bank Nifty is trading at all-time high. It has also reversed from its long-term moving average. And in the near term, we expect IndusInd Bank and ICICI to catch up with the other heavyweight banking space.
Right. Okay, gentlemen, stay with us. Lots more to talk about. And we're going to take a very quick break and then track the last 20 minutes of the trading day.
Welcome back. And one stock that has really taken a knock in trade today is Keynes Tech. Sunny, largely because of a note coming from a brokerage house suggesting that, we've seen some corporate governance concerns with regard to Keynes Tech, free cash flow concerns as well. I'm not sure, Sunny, whether SBI covers or SBI Cap Securities covers a Keynes Tech. But what view do you have with regard to a Keynes Tech? Give us a perspective.
Yeah, I think so. I have not gone through the note of another broker which has come out on Keynes.
Of course.
But having said that, anyway, Keynes as a business continue to trade at an very expensive valuation and in a subdued market sentiment. Obviously, now we always see that the stocks which are trading at a relatively expensive valuation tend to witness sharper correction. And we all know that during the quarter two also there was some a slight reduction in terms of growth outlook for second half of FY26, and FY27 is a year where the company has guided for relatively better growth going forward. So to some extent that has also weighed on the stock as we speak. Coming to valuation, I think still the stock is trading north of 70-80 times price to earning multiple. So would like to wait and watch, and maybe buy on dip is the right strategy as far as Keynes technology is concerned. Maybe one should wait for clarity from management in terms of a few observations which other brokers has raised in terms of the corporate governance issue which the company is currently facing.
Exactly. That's exactly what we would try and, want to understand from the management, given that there's such a sharp reaction as well in the stock price, currently lower by 6.5% as we speak. So it's taken quite a bit of nosedive, actually, post that note that came out from the House of Kotak. But that said, take a look at what else has been happening in the market, because there's also a Biocon, which is currently in the red as we speak right now. So that has also been taking quite a bit of hit as we speak. But let me welcome on board Mr. Ramesh Kannan as well, the Executive Vice Chairman, I beg your pardon, from Cainstag, joins us on the show right now to talk about exactly what is, the takeaway from the annual report and why is it that you're seeing that kind of move come in on the stock price. Ramesh, hi, afternoon. Can you hear me clearly?
Good afternoon. I'm
Hi.
able to hear you clearly.
Right. Ramesh, thank you so much for your time. Ramesh, I wanted to understand now, Iskraemeco, and I hope I'm pronouncing that right, it's contributed to about almost 44% of your FY25 consolidated PAT, right? Despite being consolidated for only 6 months. Tell me what explains, firstly, this disproportionately high profitability and if this kind of, margin level really is sustainable.
See, if you see last year, this Iskraemeco was not there. Now, this year, after we took over, there is the report talks about some intercompany related party transaction. If you see all those things it is between KEMPL, Keynes Electronics Manufacturing Private Limited, then Iskraemeco. We earlier also we were supplying PCBs from here to there, from Keynes Group to Iskraemeco. Today also, we are continuing to do that. And our margins are aspects of the total impact. Our buying power is more, and then we have better margins. We are also planning to clarify all these points to the media on Monday or Tuesday.
So, but this is super valuable, given the fact that the stock is tanked 6% today. It's good to get a perspective. Hi, this is Harsh here. Ramesh,
Yes,
give
sir.
us also a sense with regard to cash conversion. There's also been some skepticism that cash conversion cycle has been difficult to come through. Your sense with regard to this, and do you believe a quicker turnaround with regard to cash as well as working capital requirements or days coming down fairly quickly, or will it take some more time?
This, as far as cash cycle is concerned and working capital, we had given during the year beginning itself, by the year ending March 26, the financial year ending March 26, it will improve. It will go to around 80 plus days towards that number. So this will further improve. And year on year it will improve.
There is this noted 483 million rupees of loss that you incur in first half that needs to be reconciliated with a full year profit of 6 million rupees for Iskraemeco, right?
Any loss.
Walk us through the major cost drivers or the kind of one-offs that resulted in this swing.
Come again?
So just trying to understand this loss of 483 million rupees that you incurred in the first half of FY25. That needs reconciliation with the full year profit of 6 million rupees, right? For Iskraemeco.
Booked any losses in Iskraemeco?
Okay, all right. So give us a sense on the goodwill or the intangibles that you've been.
There is a cash delay because of collections not coming.
Correct.
But otherwise, there is no problem at all.
Sure. Okay. So when do you see the unwind on that?
That during this quarter and between next quarter, the meters will get installed and then those cash cycles will come back.
Sure. Okay. Okay. And so why is there a block?
I'm very confident on this.
Sure. So why has cash been blocked there? It's only because it's stuck in inventory, is it?
No. It is a payment model.
Okay.
As you supply, we get only 30%. Then once we install, we get another 40%. Like that, it goes.
But when, sir, do you hope to get the cash conversion cycle under control?
See, in my business, anything between 80 and 90, I consider it as a control.
Okay.
And I will be able to very confidently be able to bring it down to that level.
And sir, there's also, I won't call it an allegation, but there's also a point made that the acquisitions that you've been making, a lot of that has been going towards goodwill and intangible assets. Talk to us about the accounting there. Do you believe that the accounting, from an accounting standpoint, you're kosher?
We have not, I don't want to tell it, it's an allegation, but we have not accounted anything like that.
Okay.
And there is no goodwill on that. We will be coming to public and we are thinking to clarify these points on Monday, Tuesday.
Ramesh, what your investors would also want to know right now is the fact that there is elevated capex requirements from what we understand, and please clarify if we are wrong here, and the pending government grants as well. How is it that you're going to prioritize capital allocation going forward?
If you see, we have cash in our account of around 1,000 plus crores, and what we need for our capex is only that much.
Could you quantify that?
And, for example, if you see our semiconductor business, we get from the government 50%. And that also, the agreement is almost through. We are just pending for some papers, but otherwise it is through. It will definitely come in. I am very, very confident. There is no confusion in that. As far as capex is concerned, we have uninvested money of around 1,100 crores with us.
Okay. The other thing that I would want clarity on, which my colleague was also trying to get in here, you've recorded a very sharp increase in intangibles for technical know-how. Having said that, there haven't been any additions in your intangible assets that were made for Iskraemeco acquisition. Just clarify this point for us.
That is not meant for this. These funds are required for our semicon and other businesses. But since that licensing has not yet come in, we have not yet paid. And that is why it is, if you see, it has not yet come in.
Could you clarify in greater detail, Ramesh, as to what is the nature of these intangible additions?
See, for example, in our semiconductor business, we have to pay to our partners for training us, for developing us. And if you see in our project report also, all these things are there with the government of India. When we got the license, also when we got the approval, all these things are part of that. And this every company has to do. Today the knowledge is not there in India. So when the knowledge is not there in India, we have to acquire this knowledge. For that we are making payments.
Okay. Ramesh, the other thing is, accounting for capex. I know you clarified on the point about capex, but I just want to, get this thing clear and right on record. Specifically, your cash capex is not really aligning with asset additions. It appears a little bit complex. What is explaining the mismatch, and how is it that your investors and shareholders should read into it?
I think in the call, when our CFO explained this, people have misunderstood. They have accounted for our circuits new expansion, which it's only a thought process. We have not even applied to the government. We have only, at that point of time, we have applied. So that is if you add that only, there is a mismatch. Otherwise, there is no mismatch. If you see, 10 days back, I was in Mumbai market, and we have clarified to whomever we have met this point.
So are you saying that no addition was actually made?
Come again? No addition was actually made means?
No, what you're trying to clarify right now is that the CFO
actually, if you see,
spelled out something in the call which was actually not done, right?
Yes, it is not understood it well. For example, we have planning in Tuticorin one project. So people have added that. Once you add that, there will be a mismatch. But if you are not having that, then there is no problem at all. Absolutely no problem.
Okay. And Ramesh, just from a perspective of, if I were to just zoom out a little bit, inventories, trade receivables have gone up by 50% when I'm looking at it FY25 end to H1 FY26. So you're currently sitting at around 2100 crore in terms of receivables plus inventory. Why is that so?
together.
Is that just part of the business, or is there what's happening there, and how quickly can it unwind? Give us a sense of that.
See, in that total, they have added even for machineries, whatever we have ordered and machines which has not received it. But if you see, it is all part of the business only. There is nothing other than in the business.
Okay. Ramesh, the other thing that I wanted to, talk about was, and, a lot of analysts are talking about it right now. They're noting some inconsistency in related party transaction disclosures right now. And this is a concern which has come about today. How is it that you will address concerns around transparency and governance?
See, if you see, our auditors have audited us, and we have a company which is strictly going by the governance cycle. I am not seeing any difference in that. However, whoever has got doubts, we have then and there clarified. Whoever has asked us, and they are all convinced.
Okay. The other thing I also wanted to understand was, with nearly 28% of your net margins, which are implied now for second half of the fiscal from smart metering segment per se, what are the operational or regulatory risks that could compress margins for you?
Margin-wise, I am not seeing any compression because ours is all B2B businesses. Even our metering, if you see, we are only supplying to, it is not from dealer or distributor. So our margins are a fixed margin. It's a part of our business. It will not vary. It will be more or less constant. And I'm very pretty confident that it will stay where it is.
So what's your working
Unless
capital
the
days?
top line drops very steadily.
Right. Ramesh, what's your working capital days currently, and your target of 80 to 90, you will do that by end of FY26?
Yes.
And what is it currently at? The last I checked, it was 120 days plus. Would you have?
It was around that 115
Sure.
and what.
Sure. So that's going to be a significant improvement, a 30 to 40% improvement in working capital days.
During the year, we
Sure.
will always get material which is difficult to get. So
Sure.
we will buy and keep it. Our business models are like that only, always.
Understood.
So for the year, we will secure the material because many a times materials are not available. So we'll secure that.
I understand. And this will continue as you journey towards that $1 billion revenue mark.
It will taper down sharply because our buying powers will increase. Our supplier base will increase, and then we will be enjoying more credit from our suppliers.
I understand. Ramesh, you're a 33,000 crore market cap company. You've got around 1,000 crore of cash sitting in your balance sheet at this point. How are you planning to utilize that cash?
There is a clear plan of capex for that.
Right.
It is laid out, and it is a clear plan, and it is used only for that purpose. I cannot use it for working capital or anything else.
Sure. Yeah. So just trying to get a sense of that. Okay. Understood, sir. We'll let you go on that note. Thanks so much for coming in and clarifying at short notice and speaking exclusively to us.
Thank you very much.
Thank you, Ramesh. Truly appreciate. That was interesting because that stock took a knock on the back of that brokerage note. And of course, Ramesh seems to be brushing it off and suggesting that there isn't too much of a concern. They'll come out on Monday though. So they're going to wait all through Friday, Saturday, Sunday and come out on Monday and clarify to analysts exactly point by point on each of the concerns which have been pointed out in that Kotak institutional note. So that's something we'll have to watch out for. But today, of course, the stock down 6% and closing at the day's low. No recovery in sight, despite that that word coming in from the vice chairman.
Absolutely no recovery. In fact, it's struggling sub that 5,000 rupee per share mark, even for the market, and we haven't managed to mark that in the last